Hi there, a very good morning and good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm here with another video. And this time, this video relates to a healthcare company, a large cap in that respect, and the Nifty, which is showing all kinds of volatility. So, we'll discuss about the Nifty as well as this company. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not a member of the NSCN, BSCN, and that I'm not a portfolio advisor. Whatever discussions I have with respect to this markets and stocks is purely on the basis of my experience over the last 12, 13 years into the market, and whatever decisions with respect to investments you take, kindly take that on note that it's laden with market risk, and do consult your financial advisor. Before I talk about the company and the Nifty, here small request to kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions, seek out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, which keeps updating from 2 weeks to 1 month time. Uh, you have discussions on different companies, on markets, on global markets, economies, and whatever queries you have, I answer all that. Unlimited number of queries, plus a long-term pick on a weekly basis because of the kind of market we are in. I bring that on a weekly basis on every weekend. So I do that as well. You can become a member on WhatsApp as well. If you can email me, a yearly membership on WhatsApp is also available. Now, in order to discuss about the markets and the stocks, so the stock in question today will be Apollo Hospitals Enterprises. So I'll discuss about that. But let's discuss about the Nifty, which is doing interesting things. So it's down again today, and we are at 23,350, 23,338 was the low, and we are headed towards it again, and we may breach that. Now, what is interesting is on the election day, and this was June 3rd, and I have kept on maintaining these levels. The high just before the election day was 23,338. Today we touched 23,338 and we breached that. So we are now coming in a territory where I would say that markets are becoming very interesting, and I would say they are reasonably priced now, because if you look at the earnings picture 1 year forward, this year earnings will be around 1080 rupees. If I take 1100 rupees, then at 23,300, at around 21.2 times, which is not expensive at all. We were trading at 24, 24 and a half times just about 2 months back, and we are back to 21.2 times. So not a lot of downside in my opinion. I still maintain that it will be very hard unless there is massive selling that continues or retail panic. If retailers panic and there is selling by retail traders, etc., going forward, that will be the last straw, and probably pandemonium in the market, and then the market may make a bottom. So probably in a week, 10 days time, because I still believe November, December is pretty good. We should be in for a rally next month. So let's see how far we can go down. I still believe 300 points lower from here, there should be some sort of buying coming in, because on June 4th, when the election results came out early morning, the market fell from an opening high of 23,180. It fell to 21,280. I don't see the market go to 21,280 that easily. 23,180 will be an interesting level. 23,000 will be an interesting level, because 23,060 was the low of June the 3rd. So a lot of supports are there around these levels. So let's see how things pan out. But what is very important at the moment is the fact that India wicks need to increase. So if I look at it, India wicks is around 16.2, 16.3. It has not gone beyond 20. at all. So we need to look at it very closely. Once it goes to say levels of 23, 24, that's where normally bottoms are formed. So this needs to spike up big time with the market going down in order for the market to bottom out. Unless this happens, I think the market may just continue to go down. Having said that, at 1100 rupees, round about 1100 rupees, at around 22,500, that we will be trading at 20.4 times current earnings and at 22,500. Based on 1 year forward earnings, I am taking into account a 6% inflation and similar sort of, you can say, a GDP growth of around 6%. So will be around 12%, 5%, say even 5.5% GDP growth. We should be around 12% growth. So 1232 rupees will be the earnings. Will be trading at around 18.3 times, which will be very interesting 1 year forward. So I don't see a massive fall in the market from here on in. And if I take 22,500 versus the high that was made, then we are looking at a correction nearly uh, 14.5%, which is a very decent correction for the large cap index. Similarly, for the mid and small cap, I believe that the fall may accentuate going forward. Uh, Again, having said that, we are looking at the 200 DMA probably not getting breached. So I don't see the 200 DMA getting breached that easily. Again, 54,000 is the 200 DMA. We are right there on the mid cap index. Uh, on the small cap index, we are better off at the moment. And if we see here, 50,600 is your 200 DMA, and we are slightly positive today. Not quite positive. This is a delayed number that we are looking at, but we went to 52,100. So there is room on the downside on the broader indices. I'm not ruling that out, but numbers are decent enough in on those indices as well. So overall, what I see is that the fall in the Nifty may get arrested in the next 500 to 800 points maximum. And so these are decent levels to get into large companies which are falling from the highs. One of them is Apollo Hospitals and Enterprises, a 95,000 crore market cap company. A PE of 81 is slightly stretched in my opinion, but again, the company is producing very decent results. The chart also look better than most of the other companies with the high just made in November, and then there was a fall. So on a PE basis, it's at an average. So it has a PE of 90. The median PE is around 90. It is trading at a PE of 80. If you look at the numbers of Apollo Hospitals, then we had sales of around 5,600 crores for September versus 4,850, which is a decent jump of nearly 17-18% for such a large company. Profits went up sharply from 628 crores to 816 crores. This was a jump, and the margins expanded by 2%. Uh, on that front, 200 basis point from 13% to 15%. And on bottom line as well, from 250 crores, the profits have jumped to 396 crores. So the numbers are looking extremely good year on year, and the numbers have been pretty good for the last 3-4 quarters, and that's why the stock is doing pretty well. Uh, Now, hospitals and healthcare business should pick up even more going forward 3 years, 5 years down the line, because we had that surge with respect to sales and their business over the pandemic years from 2020 till 2022, and then there was a slight dip in the FY23 and slightly early part of FY24, but then the pickup started again. So I believe that with less specialty hospitals compared to the number of people needing healthcare, I think this trend will only pick up going forward, say in the next 4 5 years, and whatever stocks I'm bringing at the moment or companies, it is more of they are more of investment picks that look good from a 3 to 5 year perspective. uh, if you look on the shareholding pattern front as well, promoters hold 29.3% holding. FIIs have increased holding, which is very interesting in the September quarter, from 43.9% to 45.4%, and public shareholding is just about 5%. So based on this, also large investors are invested big time into the company. So a very interesting stock to look at from a long term point of view. If you have a 3 to 5 year perspective, you can definitely analyze this stock from that perspective. So this was a video on the stock as well as the markets. Please like and subscribe my channel, hit the bell icon so you get my video straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.